In today's video, I'm going to show you an example of a setup and a trigger, and then also give you some ideas in how you might want to manage a trade setup. So today we're going to look at a daily chart of IWM, and I want to show you that a single symmetrical projection is actually a setup. Now, most often I work with price clusters where I'm looking for the coincidence of at least 3 or more Fibonacci price relationships, but a symmetry projection in the direction of the trend by itself is one of my official setups. So this is a very simple setup that we had in IWM, and it simply comes from taking, some of these prior rally swings and then projecting those from the most recent low, okay, and that giving us potential resistance. Now, I did just show you the one that matched up perfectly, but I would have also run, for example, this low to this high, said, okay, there's potential resistance above there, or this low to this high, there's potential resistance. Actually, that would have come in just a little bit lower. But bottom line, we had a level. We had a single level that was almost a perfect hit. It came from taking this prior low to high swing, that was $9.32, and projecting it from this recent low, and that gave us 135.13 as an area for possible resistance. And then this swing ends up being very similar because this was 9.32, this was 9.36, so it really only went 4 cents through it, right? So that was the setup. What do you need next? Well, before I show you a trigger example, I also want to share that at the same time that we were hitting an important resistance decision here, we also were looking at cycles. January 2nd, we had, a high to high, 1618 on Jan 2nd. We had a high to high cycle, 618 Jan 3rd. We had a low to low cycle, 1618 Jan 3rd, and we also had, this was this low, another low to low cycle, January 2nd. So we had 4 cycles between, the 2nd and 3rd, and we traded up into January 2nd, made the high directly into those cycles and into the price resistance. So what do you need next? You need a trigger that tells you it's worth placing a bet. The triggers, I always look at a lower time frame chart. So for example, a 15-minute chart is the aggressive swing trade trigger chart. So let's see where that triggered. So here you tested the resistance here. Okay, that's basically what we hit on the daily chart. And then the first trigger after hitting that high was where you had the moving average crossover to the downside. I like to use the 834 EMA crossover. And then I also want to see a shift in pattern. So in other words, I want to see a shift in pattern from higher highs and higher lows to lower lows and lower highs. And here, once you both broke this prior swing low at 133.24, and you also already had the moving average crossover to the downside, it was okay to get short IWM and then define your risk above here. Okay, so the daily chart gave you the setup along with the bonus of timing work. The 15-minute chart will give you an entry. And what would you typically look for? Well, typically if the bearish pattern is going to continue, this lower lows and lower high, we typically look for an extension to the downside. Okay, but we don't always get that as far as the target, but we do put it out there as far as the target price. So we would take the low to the high, and then we'd know that our target, if you get the full move off of this resistance, is 123.26. When are we wrong? We are wrong if it takes out this last high. Okay, so the risk to reward is pretty good, because if it plays out, we're looking for this, and if it doesn't, we're not risking a ridiculous amount. And one other thing that you'd look at, for example, is, actually the decision's on the flip side. So here's a decision that, unless you look at the lower time frame chart, you're never going to see it. And you might just, trail a stop down. You'd still get knocked out of the position, but this is what I want to show you. This is where we have some similar swings. I'm taking these prior declines and I'm projecting them from the recent high. Let's see, this high to this low. Where does that come in? There we go. Okay, and then there's a couple of others. We're also going to run. We want to try this high to this low. We want to run the retracements. So we've got the low to high, and then the higher low to the high, and then let's see what else. We would also have a 100% projection of the first swing down, high to low from this high, and then one more. We actually have an extension of this low to this high. Okay, and then I have one really important area that stands out as far as, if we're going to continue down from that sell zone. This is a very important area of support that we need to crack, and it includes quite a few price relationships here. The area to focus on is this area anywhere between 130.66 to 130.112. Okay, because if it doesn't crack through that area, what should you do if you're managing the trade? Ratchet down your stops. Okay, because if it ends up holding rather than cracking, you have to be prepared for a possible resumption of the rally and being wrong in that setup. And instead of keeping the stop, above that high, at least you should lock in a little bit of cash.